What if I told you that the most important moment in XRP's entire history is happening right now and almost nobody is treating it that way? Welcome back. I'm glad you're here, because today we're not going to talk about price dips, panic, or what some random Twitter account said about alt season being over. No, today we're going to zoom out way out and I'm going to show you something that most creators in this space are completely missing. Let's start with a question. When the Transcontinental Railroad was being built in the 1860s, do you think the average American was watching the progress every single day, refreshing a ticker, panicking when a section of track got delayed? Of course not. They had no idea the scale of what was being built beneath their feet. And yet, the people who did understand it, the ones who saw the vision early, they weren't rattled by setbacks. They were loading up. That's exactly where we are with XRP right now. Now, yes, the market pulled back today. And if you've been in this space for more than 5 minutes, you already know what causes these sudden drops. It's never just one thing, it's the convergence of macro pressure, geopolitical uncertainty, and pure human emotion colliding at the same moment. You see oil prices spike because of instability in the Middle East and within hours, Bitcoin sells off and drags every altcoin with it. That's not new. That's not alarming. That is literally the pattern we have watched repeat itself over and over again since 2017. And here's what's fascinating: Bitcoin, the so-called digital gold, still behaves like a risk-on tech asset the moment something rattles global markets. Oil goes up, Bitcoin goes down. That's not a coincidence. Institutional traders are managing macro portfolios, and crypto is still sitting in the risk bucket until that changes. And it will change. These correlation moves are going to happen. But here's the thing. Those same institutional players who push Bitcoin down during a geopolitical flare-up, they're also the ones quietly accumulating XRP in the background. And that is a tension that is going to resolve in a very, very interesting way over the next 12 to 18 months. Let me talk about what's actually building beneath the surface, because the regulatory picture is shifting faster than most people realize. Think about what it took for the internet to become a commercial engine. It wasn't the invention of the web browser. It wasn't even the first e-commerce transaction. It was the legal and regulatory framework that eventually gave businesses the confidence to build on top of it. The Telecommunications Act of 1996 didn't make the internet, but it unlocked the internet for mass commercial use. That's the equivalent of what clear crypto legislation does for XRP and the broader digital asset space. And right now we are sitting at that exact inflection point. Not maybe, not hopefully, the math is shifting. And what that means practically for XRP specifically is that every financial institution that has been sitting on the sidelines, legal department holding them back, compliance team saying we'll wait and see, those barriers start falling. One by one. Brad Garlinghouse has been vocal, and I think rightfully frustrated that momentum was interrupted at a critical moment. When you're building towards something in Washington, momentum is everything. Bureaucratic gravity will always fill any vacuum you create. That's not politics, that's physics. And the lesson for all of us watching from the outside is simple. The machine is still moving, it's just moving slower than it should. But slow doesn't mean stopped. Here's something I want you to sit with for a moment. In 1995, you could have bought shares in Cisco Systems for pennies. Cisco was the company building the literal pipes of the internet, the routers, the switches, the infrastructure layer that every website, every email, every digital transaction would eventually flow through. Most people had no idea what Cisco even did. By 2000, Cisco briefly became the most valuable company in the world. XRP is the Cisco of value transfer. It is the infrastructure layer. It is the pipe through which trillions of dollars in cross-border payments, tokenized assets, and institutional settlements are designed to flow. And you can still buy it today for pocket change relative to where the math says it should go when that utility gets switched on at scale. Now I know that sounds bold, but let me ground it in something real. The total addressable market for cross-border payment settlement globally is north of $150 trillion annually. Currently, that system runs on correspondent banking, a network that is slow, expensive, opaque, and built on technology from the 1970s. SWIFT, the backbone of that system, was designed before personal computers existed. The inefficiency in that system doesn't just cost money, it costs time, and in global finance, time is money at a massive scale. XRP was engineered specifically to solve that problem, not as a speculative store of value. Not as a meme, as a bridge currency, a neutral asset that can move value between any 2 points on Earth in 3 to 5 seconds for a fraction of a cent. When institutions begin using that rail in earnest, the demand for XRP isn't going to be speculative, it's going to be operational, and operational demand doesn't sell off because oil prices moved. Now let's talk about what's happening on chain, because the data tells a story that the price chart doesn't. Every single day, and I mean every day, we are watching enormous quantities of XRP leave exchanges and move into cold storage. These aren't retail traders. Retail traders don't move 50, 60, 80 million XRP in a single transaction and send it to an unknown wallet. That is institutional accumulation. That is patient Sophisticated money building a position quietly, without fanfare, without a YouTube video announcing it, and think about what that means for supply. Every time a large block of XRP gets locked into cold storage, it's gone from the liquid market, the circulating supply tightens. And when the demand side finally arrives in force, when institutions aren't just accumulating but using XRP for live settlement flows, you have a supply shock meeting a demand surge. That's not a price prediction. That's supply and demand economics applied to a finite-ish asset with real utility. I also want to say something to the people watching this who are newer to XRP. Maybe you only have a few hundred tokens. Maybe you're looking at the current price and wondering if you missed it. You haven't missed it, not even close. Think about this. Right now, holding just 500 XRP puts you ahead of the vast majority of people who will ever try to accumulate this asset, because here's the human psychology of markets: most people don't buy opportunity. They buy validation. They wait until something is on the news. They wait until their coworker brings it up at lunch. They wait until the price has already moved 400% and suddenly it feels safe. By the time XRP is safe feeling, it'll be priced accordingly. The people who will look back on 2025 with the most regret won't be the ones who bought and watched it dip 10%. They'll be the people who almost bought and didn't. Let me close with the big picture, because I think it matters more than any price target. We are living through the early construction phase of a new financial system. Not a better version of the old one, a fundamentally different one. One that is faster, more transparent, more accessible, and more efficient by orders of magnitude. And like every transformational infrastructure shift in history, the telegraph, the telephone, the internet, the window to get in early doesn't stay open forever. The regulatory framework is coming. The institutional adoption is building quietly. The on-chain data is screaming accumulation, and the utility layer, the part where XRP becomes the operational backbone of real financial flows, that's still ahead of us. So yes, we had a red day. Yes, the chart pulled back a few cents, but the trajectory hasn't changed. The architecture hasn't changed. The reason XRP exists and the scale of the problem it solves, none of that changed today. Stay patient, stay convicted, and don't mistake temporary noise for a change in the signal. I'll see you in the next one.